So, if you've been holding any spot crypto or have any longs open, your day is probably not very great. Um, all I can say is I was wrong, and it looks like Bitcoin did not want to continue to 74 or $76,000 like I initially thought it would. Um, it it really did look like it wanted to go above 72,000. Like I said, there was a chance 72,000 would be the lower high, but I really did expect another move higher. Now, I'm okay. I was hedged pretty well, but it really isn't looking too good, is all I can say. Now, if I jump down quickly to the 15-minute chart, I'm actually not going to do much analysis on this chart, but I wanted to show you the new THT fair value bands indicator also has deviation bands to the downside, and they pretty much work the opposite direction. So if the standard deviation band, if price action hits the number one standard deviation band to the upside, it's usually a good idea to take some profits off the table. And if it hits the number two standard deviation band, it's a pretty good idea to pretty much close your entire position. And the opposite comes to the downside. When it hits the number one standard deviation band, it could be a good place to close a short or potentially open a long and expect a slight bounce or a uptrend to form. And if it hits the number two standard deviation band, you'd pretty much consider closing your entire short or opening a bigger long. Now, I know Peter DiCarlo really doesn't like shorting the market, and he's not a fan of buying the dip. You know, like if you spoke to him, he'd tell you he'd want to see price action, at least hold or get above the fair value band before thinking of going long. But again, exactly how you trade this strategy is up to you, and being such a new indicator, I haven't really backtested it myself, either software or manually. So I don't actually have a set strategy with this indicator. I'm just taking note of how price reacts to the fair value bands. And I'll probably come out with a video talking about a exact strategy very soon in the future. Now, anyways, with that out of the way, let's have a look at Bitcoin. You can see we are rejecting off the bull market 50% level, and it looks like we're going to close a second month underneath. Now, if we have a look at what happened last time, typically once you get that close, that following month is a humongous flush out. And this month has actually ended up being a bounce, so it could potentially be that this month is a bit of a bull trap, and we either get the flush out, over the weekend, or the first 2 days of next week, or we just get this flush out next month. History doesn't have to repeat, but obviously it can rhyme. So that is something to definitely pay attention to. Other than that, Gann swing indicator is down in the monthly 1 bar. The BX trender is now 6 months dark red. Typically, Bitcoin bear markets, when you're 6 months dark red, that 7th month is a massive flush out, and you'll typically see at least another 6 or so months of sideways consolidation before price rockets to new all-time highs. So if you haven't bought the dip at 60k, you probably will get a few more chances to buy at 60k or potentially even lower. On the weekly time frame, you can see this fair value band on the 1 week. It pretty much called the bear market low last cycle, or almost the price low, but not quite the time low. And potentially that is what is happening again. You can see price busts through with this massive, lunar collapse, and then it kind of just consolidates for a bit, flushes out again, doesn't manage to get below the number one standard deviation band to the downside, and potentially that is what is happening now. We've flushed through that -1 standard deviation band. We've bounced, consolidated a bit. Maybe we see another flush. Obviously, this deviation band is now sloping down. It's at 59K right now. But, in the next few weeks, maybe it comes down to, 56, 55, 50K. And price action doesn't quite manage to hit it, Maybe this band comes down to, let's say, 50K at the start of June. And we end up hitting, 52K, and that ends up being our bear market low. Now, obviously, I am not wed to that theory, and for now, the BX trender on the weekly is actually still green. Despite the flush out that has happened this week, it is still green. I am on red alert for what happened in January to happen again, where we continue selling off this week and that BX trender ends up closing dark green instead of light green, and it pretty much turns into a full-on capitulation in the next few weeks. So, if that does happen, we'll just have to wait and see. It doesn't look like the Binance chart, price has ever come down to this -2 standard deviation band, and I would be pretty concerned if Bitcoin went below 30K, just like Jason Pizzino talks about in his videos. You don't really want to see Bitcoin break underneath this 2023 consolidation. That would not be good for the long-term health of Bitcoin. But for now, I'm just going to have to go with the chart. For as long as the weekly BX trender is still green, I have to remain slightly more neutral than bearish. The Gann swing indicator has turned the weekly swing down, so that is in the back of my mind. Coming over to the daily time frame, you can see if I turn off this fair value band to declutter my chart, you can see price action is now on track to close underneath the 50-day TMA unless something extraordinary happens in the next hour and we see a 5% pump. Now, it does look like this fourth time breakdown is going to play out after all. This swing failure pattern has happened to both sides. So wreck the shorts, wreck the longs, and it's not looking great. That's all I'm going to say. So if I do a fib retracement from the low to the high, and that is pretty much bang on 76K on the Binance chart, that is nice. So I'm just going to anchor it right there. You can see price has cut straight through that 50% level at $68,000, and we are now in the weak half of this trading range, and you can see that we are starting to get selling pressure that is on par with the buying pressure. So in terms of Wyckoff, I'm looking for lower highs underneath the midpoint of the trading range. So if we get a daily 1 bar lower high underneath $68,000, I would be loading up very heavily on my shorts. And I think if we do get something like that, it would also set us up for another one of my favorite patterns, the 3 daily closes underneath the 50-day TMA. Now, I do believe, based on how massive this flash out was, along with the fact that the long-short ratio got to around 4% in balance, favoring the shorts, 48.52, we will probably see a bit of a reversal to flush out those late shorts that FOMO'd in, as well as to retest this previous swing low. Now, obviously, price does not have to come back to this 50-day TMA. It can just make a lower high underneath it, like we saw back here in November. Like, it doesn't have to come back and retest it after cutting straight through it. So yeah, what can I say? Our liquidations are not actually picking up as much as I thought they would, which kind of lines up with what Jason has been talking about on his channel. The daily exchange volume is just dead. There's not much interest in crypto. Like we've seen, what's this? A 5% flush out? Something like that. Yeah, something like a 5% flush out, and we've only seen like 300 and something million dollars of liquidations. Like, I remember back when we were trading above like 100K, you'd see like a 5% drop in Bitcoin, and it would be like 700 million, $1 billion of liquidations. Like, no one cares about Bitcoin right now, and that is probably not great for higher prices. However, we do know all Trump has to do is come out and say something, and we could get a 5% move to the upside in a day. So, who knows? On the 4-hour time frame, I have been having a play around with the standard deviation bands, and you can see this -1 standard deviation band for as long as we are in a trading range tends to hold as support very well, along with the fact that this one standard deviation band to the upside whilst we're in a trading range serves as like a lid for the market. And one thing you do notice is once price breaks below that trading range, like when we started to lose 86K at the end of January, price pretty much, instead of hovering around the fair value band, it starts to hover around the -1 standard deviation band and comes down to the -2 standard deviation band. So you can see price kind of chops between these two bands instead of between, fair value and +1, -1. So that is definitely something I am watching out for. If we cannot find support pretty much now, and come back and retest this fair value band at 69K, which is also lines up very well with the 50-day TMA and just above that breakout zone. Now, obviously, unless we see, a huge reversal in a single candle, this fair value band is going to slope downwards. So I do believe when we come back to test this fair value band on the 4-hour, it's probably going to line up very well with the 50% level of the range and the daily swing low there. And obviously the 50 TMA is probably also going to start to slope downwards. However, being a triangular moving average instead of a simple moving average like the fair value band, it does move slower because it's the average of the moving average, so it's pretty much a double smoothed line. So I do believe this 50-day TMA might actually keep sloping upwards for another few days before it starts to slope back downwards. And I think that's going to be very similar to potentially what happened up through here. You can see price broke below it, but the TMA kept sloping upwards. And obviously we saw this capitulation where price ran a lot faster than time, something that Jason always talks about. He said that the 60K low might be close to the price low of this cycle, but in terms of time, we've kind of still got months. And obviously looking at this daily time frame, you can see we overshot time very quickly, so we pretty much reversed a little bit, chopped sideways for pretty much 2 entire months and waited for the moving averages to catch up. So what is my action? Planned action? Well, I'm definitely not piling into any longs right here. And what I'm going to be doing is I'm going to be closing out my long hedge if we come up to around 69K and loading up on shorts. Now, increasing my short hedge. And we don't have to come up to 69K, as I said. We could come up to 67.3, 68, but obviously the lower this daily lower high forms, if it does end up forming, the weaker the market. And if we see an extension in this daily downtrend, like we get another flush out bar that comes into potentially this 786 to 826 zone, I would actually be looking at potentially longing, because being a smart money zone, it's usually where institutions will start buying the dip a little bit, from traders helping traders. We got to remember that 786 to 826 fib zone. And if I show you what happened last time, just anchor that at 97, was it? 97.924. Close enough. You can see it doesn't always play out, but for the most part, you'll see some sort of bounce. So you can see here, you know, we snapped into this smart money zone around 83.6, came back to 84.7. The next day we broke through it, had a quick reversal before we kept flushing out. So obviously it doesn't have to hold the market up, but if you are looking for a potential counter trend long trade down on like the 1 hour, 4 hour, 15-minute time frames, it is something in the back of my mind that potentially smart money could drive us, you know, to 63k, even, you know, 60, 61, 62k, and then have a snap reversal all the way back to, you know, 66, 67, 68, 69 before the downtrend can continue. And I think I'm very 50-50 torn with how I'm going to trade this. These are just a couple of ideas. I'm not 100% sure if I'm going to take a long trade if something like that does come into fruition, but I will probably be making daily videos updating my plan and my analysis. The one thing that is in the back of my mind is this 3 higher lows on the daily BX trender and then flipping into lower lows. And this exact same thing happened at the end of January. We got 3 higher lows, then we got lower lows, and Bitcoin basically capitulated from there. Now, one thing to note is those 3 days of higher lows were underneath the 50 TMA, so we were basically rallying into resistance, whilst in this case, the higher lows were above the 50-day TMA, which was why I was pretty bullish at the time. So if we come back and have another look at what happened the last time we got those 3 higher lows, and then we got a dark red lower low close, that pretty much marked the end of that downtrend, and price quickly snapped to the upside. But again, we were trading underneath the 50 TMA, and we just came to retest resistance. And if something like that were to potentially happen, you know, we would have wanted to see this day right here be a green day to the upside, completely reversing that single lower low day before. But obviously that has not happened. Now, I'm sure if you're a viewer of Michael Pizzino's channel, you're going to know that for as long as price is trading within a range, you should respect the fact that price is within that range. And right now, we are pretty much holding up very well on this 618 fib level at around $66,000. And whether this ends up being accumulation or distribution, I am still very undecided, simply because we've got so many conflicting information across the different time frames. Like the monthly chart suggests we should flush, the weekly chart is bullish, the daily chart is bearish, but we're still within the range. The 4-hour chart is again suggesting that for as long as we're within the range, when we come down to this -1 standard deviation band, we should bounce. So I guess I probably could have summed up this entire video in 30 seconds and said, you know, watch how price reacts at this 50% level. But that is probably what I'm going to end it on. Thank you all for watching, and please like, comment, and subscribe. Goodbye.